In the world of investing, there are many strategies to grow wealth. Some investors chase high-flying growth stocks, hoping for quick profits. Others prefer the stability of bonds, content with modest returns. But for those seeking a balanced approach that combines income generation with long-term growth potential, dividend investing stands out as a compelling option. Dividend stocks represent ownership in companies that share a portion of their profits with shareholders, typically on a quarterly basis. These payouts provide a steady stream of income that can be reinvested to purchase more shares, compounding returns over time. Moreover, dividends can act as a buffer during market downturns, cushioning the impact of price fluctuations. In today's uncertain economic landscape, marked by inflation, rising interest rates, and geopolitical tensions, dividend-paying companies with strong fundamentals offer investors a measure of stability and the potential for attractive returns. The stock market is a dynamic arena where prices constantly fluctuate based on a multitude of factors, including company performance, industry trends, and investor sentiment. While some stocks trade at premiums, reflecting high expectations for future growth, others may be undervalued, presenting savvy investors with opportunities to buy shares at a discount to their intrinsic worth. Undervalued stocks are those whose market prices are below what their financial performance and future prospects suggest they should be. This discrepancy can arise due to temporary market inefficiencies, negative news cycles, or broader economic concerns that overshadow a company's underlying strength. Identifying undervalued stocks requires careful analysis of financial statements, industry dynamics, and company-specific factors. Investors should look for companies with solid earnings growth potential, strong balance sheets, and a track record of dividend payments. Exxon Mobile stands as a titan in the global energy industry, engaged in the exploration, production, refining, and marketing of oil and natural gas. With operations spanning the globe, Exxon Mobile plays a critical role in meeting the world's energy demands. Despite the ongoing transition to cleaner energy sources, oil and gas will continue to be essential commodities for decades to come. Exxon Mobil is well positioned to capitalize on this sustained demand, leveraging its vast reserves, technological expertise, and global infrastructure. The company has made significant investments to enhance its production capacity, improve efficiency, and reduce its environmental footprint. These strategic initiatives are expected to drive earnings growth and create long-term value for shareholders. Exxon Mobil boasts an impressive track record of dividend payments, having increased its annual payout for over 4 decades. This commitment to returning cash to shareholders underscores the company's financial strength and its management team's confidence in future earnings power. With a current annual dividend yield of around 3.5%, Exxon Mobil offers investors a compelling income stream. The company's robust cash flow generation, underpinned by its integrated business model and disciplined capital allocation, provides ample room for continued dividend growth. Moreover, Exxon Mobil's dividend is well covered by earnings, indicating a high degree of sustainability. This financial stability makes Exxon Mobil an attractive option for income-oriented investors seeking a reliable source of passive income. Dow building a sustainable future. Dow, symbol DOW, is a global materials science company that produces a wide range of products used in various industries including packaging, infrastructure, and consumer goods. The company is committed to innovation and sustainability, developing solutions that address global challenges such as climate change and resource scarcity. Dow's focus on high-growth end markets such as electric vehicles, 5G technology, and sustainable packaging positions it for long-term success. The company's investments in research and development have resulted in a pipeline of innovative products that are driving revenue growth and margin expansion. Furthermore, Dow's commitment to sustainability is not only good for the planet but also good for business. By reducing its environmental footprint and developing eco-friendly products, Dow is enhancing its brand reputation, attracting environmentally conscious customers, and gaining a competitive advantage. Dow's dividend poised for growth. Dow has a solid track record of dividend payments, having maintained or increased its annual payout for over a decade. The company's current annual dividend yield of around 4% is attractive, especially in the current low-interest rate environment. Dow's dividend growth potential is supported by its strong cash flow generation, driven by its leading market positions, operational efficiency, and disciplined capital allocation. The company's management team has expressed a commitment to returning excess cash to shareholders through dividends and share buybacks. As Dow continues to execute its growth strategy, expand into new markets, and benefit from the global economic recovery, its dividend is well positioned for continued growth, making it an attractive option for income-seeking investors. Verizon, connecting to consistent returns. Verizon Communications, ticker symbol VZ, is a telecommunications giant, providing wireless and broadband services to millions of customers across the United States. As a leading player in a mature industry, Verizon benefits from stable demand, recurring revenue streams, and high barriers to entry. The company is at the forefront of the 5G revolution, investing heavily in network infrastructure to deliver faster speeds, lower latency, and enhanced connectivity. This technological leadership will enable Verizon to capitalize on the growing demand for data-intensive applications, such as streaming video, online gaming, and the Internet of Things. Moreover, Verizon's strong brand recognition, extensive network coverage, and commitment to customer service have earned it a loyal customer base, further solidifying its market position and supporting its long-term growth prospects. Verizon's dividend, a safe haven for income. Verizon is renowned for its shareholder-friendly capital allocation policies, consistently returning a significant portion of its earnings to investors through dividends and share repurchases. The company has an impressive track record of dividend growth, having increased its annual payout for over 15 consecutive years. With a current annual dividend yield of around 7%, Verizon stands out as a high-yield stock, offering investors a steady stream of income. The company's dividend is well covered by earnings, indicating a high degree of safety and sustainability. Verizon's strong cash flow generation, driven by its recurring revenue model and disciplined cost management, provides a solid foundation for continued dividend growth, making it an attractive option for income-oriented investors seeking a reliable source of passive income. Navigating the market for dividend success. Dividend investing can be a rewarding strategy, but it's essential to approach it with a long-term perspective and a focus on quality. Here are some practical tips for investors seeking to build a diversified portfolio of dividend-paying stocks. Look beyond yield. While a high dividend yield can be enticing, it's crucial to consider the sustainability of the payout. Focus on companies with a history of dividend growth, strong earnings, and manageable debt levels. Diversify across sectors. Don't put all your eggs in one basket. Invest in companies across different industries to reduce risk and enhance portfolio stability. Reinvest dividends. Reinvesting dividends allows you to purchase more shares, accelerating the compounding effect and boosting your returns over time. Stay informed. Keep abreast of company news, industry trends, and economic developments that could impact your investments. By following these guidelines, investors can increase their chances of achieving their financial goals through dividend investing. Invest for today and tomorrow. In conclusion, Exxon Mobile, Dow, and Verizon represent compelling investment opportunities for those seeking a blend of income and growth. These companies have strong fundamentals, attractive valuations, and a history of rewarding shareholders through dividends. While past performance is not indicative of future results, these companies' track records, coupled with their future growth prospects, suggest that they are well positioned to continue delivering value to investors for years to come. As with any investment, it's essential to conduct thorough research. Consider your risk tolerance and consult with a financial advisor before making any decisions. Remember that investing is a marathon, not a sprint, and patience, discipline, and a long-term perspective are key to achieving your financial goals. Remember to hit that like button, smash the subscribe button, and check out the recommended videos.